Hey everyone, thank you for tuning in. Today is Thursday, September 25th, I believe. Market's been open for about an hour and 20 minutes, and I want to talk about action in Hood and a specific trade that I have in the October 17th expiry. So if we take a look at the activity tab here, a few days ago, actually this was yesterday, was it yesterday? Yeah, so I only need the last 7 days here. Yesterday's fine too. Anyway, yesterday, October 17th expiry, did a risk reversal for a small debit of a nickel. And the specifics of the trade are the following. I sold a 150 put, or call, sold a 150 call, bought the 108 put. This was done for a debit of a nickel. And then this morning, with Hood being down, let's take a quick peek at a chart of Hood to see where this was yesterday. Go to a half hour on these candles. And okay, so during the day session yesterday, it got as high as $130, $130, just a touch over, and that was at 8 a.m. Pacific time. And I put this risk reversal on at end of day yesterday, a few minutes before the close. And at that point, let's take a peek to see where it was trading. Roughly in the 126.70, 127 or 30 range. So it had a range at that point, the last half hour, of about 63 cents. And today it opened lower. It was below 122. Is that correct? Let me double check. As low as 120, below 121. Today's low is 120.63. So it's had a bit of a recovery. But anyway, during the early part of today's session, I decided to convert this risk reversal that I had by covering the 150 call that I was short, bought that for 86 cents, and I sold a 106 put, and that left me with a bearish put vertical, the 108, 106 strikes. But note here that covering the 150 call and selling a put to create a vertical down there, that brought in a credit of 74 cents. So an overall credit, including the debit to establish the risk reversal, is a touch under 70 cents, 69 cents of a credit. And that left me with the following position. We will see that that adjustment left me with a put vertical, 108, 106 for credit, and possible an extra $200. So that would be $269 max on that, possibly. But I was thinking at the time, and this was earlier this morning, that if Hood continues to drop, then what I would probably do is sell put vertical here. And the strikes I wasn't sure about, but I'd probably make it the same width as this, which is too wide. So if I could sell something, let's say 95, 93, for example, for $1, then that would bring in an extra $100 credit, and that would increase the overall credit to 170, and then I'd have on a condor. But rather than doing that, what I actually did was I noticed the market started to rally, and it's rallied about $4.50 from the low, 470-ish from the low. I added a credit, or a ratio spread here, done for credit. So same expiry, October 17th. I bought the 140 call and sold 2 of the 145s, and that brought in an 80-cent credit. So now the trade is up to, has a credit of $1.49, and it leaves me with the following position. So to the downside, I have this put vertical, and should hood drop enough, I'd be willing to convert this lower boundary perhaps into a condor, or maybe I'll keep this and add a ratio spread. I don't know yet. It depends on the move, the magnitude of the move, and when it happens. But anyway, getting back to the current construction, in between 140 and 108, I have $1.50. Let's just call it $1.50. It's a $1.49 credit, but let's just call it $1.50. So I have a $150 credit in between, and to the upper end, in the upper boundary, I have a ratio spread between 140 and 145. So I'm long a call at 140 and short to a 145. Now there's risk to the upside because I added a risk component by selling 2 of these calls at 145. However, if at expiration, mind you, pins the tail on the donkey, then this brings in an extra $500 in addition to the 150 that's booked. Obviously, that's hopeful. I don't want to say hopeful scenario, but that's the max profit on the upper end, and that would be a very good scenario. Whether that's going to happen or not, I don't know. But for the meantime, I have a wide area here where profit is locked in, and then I have possibilities to the downside to make this trade more profitable, and on the upside, I have an extra 500, but I have all of this risk to the upside for now. We'll see what happens. This will most likely be adjusted at some point, but in the meantime, I still have some time to expiration on this, 22 days, so I will make adjustments accordingly. All right, that's it for this video. I hope that was helpful. I'll catch you guys next time.